Welcome to Envisioned Broadcasting, the station designed to encourage, equip, and empower you for growth and success. Presents Women Emerge with Melissa Lambert, a show that shines a light on spiritual growth, health, purpose, and financial education. It's time to emerge and begin to live out your dreams, walk into your destiny, while making a difference in the lives of many.
Welcome to Women Emerge with Melissa Lambert. I am your host, and it's always an honor to come before you another Thursday. Happy Thursday, y'all. Oh my gosh, September is coming to an end. We were actually, when we started September, we made this aware that September is nationally where they recognize September as Life Insurance Awareness Month. And for the every Thursday in September, we've had the honor to have the CEO and the president and the visionary of Core Financial Partners, Tony Chamblee. And he's been so graceful, so amazing, so impactful. Not only have we been on this air every Thursday, but we also been doing our live every Friday. And I am just so flat out excited because we're coming into a close, and I think this topic in itself is just truly amazing. But before we go any further, just want you to know that this show is being sponsored by Lambert Legacy Financial, powered by Core Financial Partners. Our goal is to teach the truth about money, engaging individuals and their families to think about and plan their financial future, but also their legacy. Our focus areas are our family, fun, future, legacy. And this show, when you do come here every Thursday, we're going to introduce you to leaders, experts, and motivators to share their journeys and their stories through personal and professional growth, knowledgeable tips, and lesson learned that will empower you to grow. It's time, y'all. It's time to grow your mind, your spirit, your brand, your business. And today, yes and yes, truly your finance. We have, again, Tony Chamblee, who is here. We're talking about the truth about money. But today, we're going to discuss something. And I'm so excited that we're discussing this because I had the opportunity to have one of this policy for my daughter, and a couple of clients of mine had this policy. I didn't understand the difference. And Tony kind of broke it down to me. And I'm like, yo, we have to talk about this on air. And again, as we talk about this information, we are not debating anyone. We are giving information to the public so we can all be informed of what we do have. So today's topic is IUL the right product for the infinite banking concept? Again, I'm going to say that again. Is IUL the right product for infinite banking concept? And just in case you don't know what IUL stands for, it is Index Universal Life. So please welcome to the show no other than the CEO and president of Core Financial Partners, who is a certified IBC practitioner with the Nelson Nash Institution. Please welcome Mr. I call him Tony. You call him Mr. Tony Chamblee. Welcome to the show, sir.
Good morning or afternoon, wherever we are right now, or wherever you are right now. And Melissa, thank you again for inviting me. You know, my passion is to teach and to lead, and it's always a good day and a good time for me to be able to share some information that I believe can make a big difference in other people's lives. So thank you again for inviting me.
You're so welcome. And again, some people may have been tuning in and some may have not. And I always want to make sure people understand who Core is, the core value, our mission, and our core value as a company. So let us know a little bit about yourself. And also, what is the mission of Core Financial Partners?
Sure. Just a little bit about myself, Tony Chamblee, living in the great state of Delaware as we speak. And, you know, a vision came to me to really do something that wasn't being done when it comes to building the platform of financial education. I know many of us, Melissa, have gotten formal education, right? And We've gotten education on trades and things of that nature. However, not many are getting the truth about money. So we need that financial education that can really steer us in the right direction. And we decided to create a platform that can be, a resource to many people across the country that are serious about their financial present and future, and to leave a legacy as well. And so we have a mission. Our mission is to help people through, we call our four-step process. One is go from survival to security to success, and then significant. And survival, of course, would be living paycheck to paycheck. Come out of that, start saving money, putting some money to the side, and building it up to about 6 months of your income. And then once you've gotten that accomplished, now you can start looking at buying income-producing assets that can now have you live off your cash flow, your assets that are creating cash flow. It's kind of like giving your money an assignment to work for you, and you can now choose what you desire to do or do what you meant to do. And so that would be success. And then significance is really all about taking what you've learned and built up to for the fortunes that you're blessed with, and now sharing it with those that you care about and leaving a legacy. And we know what legacy is. It's whatever you have done, only done for yourself, it dies with you. What you have done for others is going to live on forever. And that's what we're in a business of doing here, is helping people leave the legacy they'd like to leave behind. Now, I want to say this. When it comes to these 4 steps, you can be wherever everybody's at a different place. So if you're at step 1, or you can be almost at step 4, we can just get you over and get you over the hump to get you to step 4, which is significance. We're here to help you. Our philosophy is that more money doesn't get you or keep you out of a financial situation. Only financial education does, right? I believe we're under the premises of believing that we can go work 2 jobs, work 2 businesses, make all this money, but just to find out you're going to lose 2/3 of it on the way if you don't have the true truth about money, right? And that's where we're here, to be able to make sure we can evaluate and look at your scoreboard and put you in a position where you are taking 100% of what you believe rightfully is yours all the way over the top. And that's what we believe financial education can do. So that leads us to our vision, and that is to make sure everyone is getting the awareness and education that allows to prosper. That's what our vision is, that everybody is. And so we just ask you, as we go through the process of giving education out throughout these months and these years that are coming up, just don't keep this a secret. We're going to be on many platforms, and we want to share as much as we can in the most efficient way as possible.
Wow. Wow, can you hear Mrs. Chamblee, can you hear me?
Yes, I can hear you. Yep, loud and clear.
I'm just excited. Every time you come on the air, I get so excited because I truly believe core mission in itself sits in a class all by itself, with purity, with compassion, with purpose. And I'm so thankful that yourself and LaToya you guys could have easily said, you know what, I'm going to do this by myself. We're going to keep this within the family, within the Chamblee family. You decided to say, no, that's not what we're going to do. We're going to expand this where we can have other people that we call corepreneurs be a part of this mission to create a greater crusade. So when you decided to get into this field, you also decided to become a practitioner of the Nelson Nash Institute. Tell us a little bit about that part of the equation for your practice, but also what is infinite banking concept?
Sure. When it comes to the Nelson Nash Institution, that's an institution that's been founded by Mr. Nelson Nash himself, where he was the gentleman that discovered the infinite banking concept and the proper way to use it. He discovered it through a lot of his trial and errors, literally on his knees praying to God, what can what needs to be done. Give me the instructions and the guidance to get out of my situation. A lot happened to him around that time period. It was like 3 or 4 events that happened right behind each other. And it's actually in his book, Become Your Own Banker. You would want to get that and read about that and get all the details about that. But anyway, so he started this crusade on people learning about the infinite banking concept. And so anybody that was wanting to be or was a licensed agent across the country, he offered a way to learn this and to be able to share with the public at large the proper way. And so when it comes to the infinite banking institution now, because he did pass in 2019, he left a legacy that, you can actually go there, get a study material, and go take a test and pass the test to become certified. And that's what we've done, and we've led at least a dozen people to do the same thing as well. And I say we, my wife and I, are responsible for close to about 10 people right now out of 300 or so that's in the whole country certified. Out of our office, we've helped about 10 of them to get certified. And we're really proud of that because the mission of Nelson Nash was to touch 10% of the population, because something happens when 10% get a hold of something. It can make change, and it can make change quickly. Exponential growth allows it kicks in. It allows the paradigm shift to happen, right? Have you ever heard of the S curve, right? When something is opposed and validly opposed and then accepted. We believe that's what the process is going through now. Because when we first got started, Lisa, you never heard of infinite banking. You didn't see it in the media or anything. And so we knew this day was coming. So we wanted to prepare 10 years ago for where we are today. And that's why when you mentioned it was only us at one time, but we knew we could not get this out there. It was almost keeping it a secret for just to be two of us, LaToya and I, to share this with people. And we, one by one, got people that fell in love with what it is that infinite banking was about and what Core Financial Partners stood for. And now I believe we're touching almost every state right now, but we haven't even gotten started yet. So I'm excited about that. And that's why we're having that conversation today, because we need everybody to know, you want to be aligned with someone that's certified or a firm that has certification towards the infinite banking concept, because there's a lot of intangibles in it that the average, even licensed agent would not know. And we just want to make sure everybody's set up properly, because it really can create a significance and leave a legacy for those that are serious about their financial future.
And that's why we're here. And I'm so, again, you are tuned into Woman Emerge with Melissa Lambert. It's always an honor and a privilege to have Tony Chamblee. He is the CEO and president of Core Financial Partners. And today we're talking about, is IUL the right product for the infinite banking concept? So let's jump right in, Tony, because I know that we as agents, we want the best for our clients. And we want to be able, here at Core Financial Partners and Lambert Legacy Financial, we want to be sure that we are first educating our clients, getting them in the know. Why is it? So we're going to talk about how. How is the premium? How does the premium work with IUL versus a whole life policy, which is what we use with the infinite banking concept? Can you explain further, sir?
Sure. When it comes to IUL, right, the Index Universal Life Product, the premium is under the premises of, what's the word? It has a variable premium, right? It can go up or down. And the reason why, if you fully fund your cash value properly, your monthly premiums could be less. However, though, if your policy performs poorly based off of, because it's on the market, it goes up and down according to the S&P 500 and the Dow Jones and things of that nature. If it performs poorly, it can cause you to have to pay more premium to keep up with it as well. And also on the back end, I'll get into this a little bit later, it also, on the back end, like once someone hits 70 years old, give or take, the premiums can go higher as well, according to the cost of vitality, right, which is the death benefit that's built inside. That's flexible as well. That premium cost for that could be flexible as well. So that's what I find, a big difference is the flexible premium that comes with having an IUL. When it comes to whole life, the premiums are level, right? The only thing that's flexible in a whole life premium would be your paid-up additions. The paid-up additions is what's considered putting money in it as a savings in a cash value. But the proper terminology would be the paid-up additions. So that's going to stay the same for as long as it has to be paid. So whether it's paid all the way through a certain amount of age, on average it's paid between 65 and 75 years of age, or 10 to 20 years or so, give or take. And I love that idea that it's fixed. It's a fixed amount. And the flexible part is just you have a minimum funding you can do through your paid-up additions, or there could be a maximum, right? And that gives you ability to max fund it, or just go with your budget allows you, and you can minimum fund it or keep it somewhere in the middle. So I love that idea. Here's another thing to go back to the IUL is that whenever you actually have a late payment, right, on your policy, you lose all the guarantees. Think about that. If you're late and you can lose all the guarantees, even after you've caught up and let's say you're a week late on your premium payment and you didn't pay it, you still have lost those guarantees going forward for good. And it's just, to me, I just want you to be careful if you're in a IUL and to know those factors about the premium payments are not to be late at all, because all the guarantees that it do offer could go away.
Interesting. I didn't know that. Again, I am learning just like everyone is learning today about the IUL policy. So I want to ask you another question, even pertaining to that. So if with a IUL, when you're late on your payment, all guarantee is, it's gone forever, is lost. What happens with a whole life policy that we set up for infinite banking? If someone is ever late on their premium, what happens then?
Good question. When you're late with a whole life policy structure for IBC, you just got to pay it before it lapses. You have most companies, mutual insurance company gives you a 60-day grace. So 60-day grace allows you to get back on time, get caught up. And long as the premiums are being paid within the 60 days, everything is the same. You still have all your guarantees. It doesn't take any guarantees away at all. And also I want to make this point that, everything in a whole life policy is guaranteed other than the dividends. And we'll get into that a little bit later, but everything is guaranteed. Even when you lapse the policy, there's a way to renew the policy back to its good standing, and you go right back to where you left off. You never lose those guarantees that's in a whole life structure policy for IBC.
Interesting. Okay. Mm-hmm. I like this conversation.
Reinstate is the proper terminology when you reinstate it.
Okay. I like this. I love this conversation because I like when, again, we are given information for people to have clarity on what you have. There's no debating on what's best, what is better and what is not. We're talking about the difference, how can, again, is IUL the right product for infinite banking concept? And I'm glad that you were able to kind of just give us an understanding about the premium, how premium works with the IUL versus the whole life. And I'm glad that we were able to understand that if you ever are late on your payment with an IUL, all your guarantees, even after you get caught up, is lost forever. But if you have a whole life structured policy that we will structure for you with the IBC concept, long as you have it doesn't lapse within that 60-day period and you get caught up, your guarantee is still there for you. And even even when Tony just said, even if it lapsed, there is a way that we can restructure back to get you back the policy and get you back on track. So thank you for sharing that, because that's something, again, I'm learning just like the listeners are learning about how IUL is structured and if it's possible for it to be used with infinite banking concept or not. So the second question I have for you is, what's the difference with the death benefits with IUL versus the whole life policy? And reason why I'm asking this, because I saw it and I was like, wait, but Tony, why did the death benefit didn't move here and it moved here? So I need you to really kind of touch on the difference with the death benefits with IUL versus the death benefit with a whole life policy when we set that up for the infinite banking concept.
Sure. When it comes to the IUL, let's start with them first. There is an annual mortality charge on these policies when it comes to the IUL Index Universal Life. And what I mean by annual mortality charge, they renew inside of the structure of the IUL the cost of insurance every single year, right? So every year that the insured is living, it's going to cost more for the internal cost of the death benefit, right? Because it's a built-in annual renewable term inside of an IUL. So that means the younger you are, it's going to perform pretty well. But the older you get, the less dollars are going to go building your cash value, because it's taking more dollars to keep up with the cost of insurance. So that's why there's a big challenge in most cases when people get older. Mortality charges tend to explode at when you get older, around 65 to 75 years old, right, to the point that most people don't keep their policy or can't afford their policies when they hit those ages. So keep that in mind. The mortality charge is an annual renewable term that's being rated every single year. It's reset every single year within a IUL. So when it comes to whole life, you start off with whatever age you started off with, and it stays the same. The cost of insurance is whatever year you started in, right? That's why, what is the best time to get started with the IBC structured whole life policy from a mutual insurance company, dividend paying? Today, right? Now is the time, because your age matters. Every day matters. And with once you've gotten one started, right, you're locked in at that age, right? You're locked in, and you can know that your mortality charge is from that age, whether it's from birth, within the first year of being born, and whether you're 20 years old or 50, it doesn't matter. You're locked in for that age, and it doesn't affect the growth when it comes to the future of your policy. And I love that it's a fixed and a locked in rate based off of the age you was approved at. That's the biggest difference. That's why when I look at IUL's in illustrations versus whole life, it always going to perform a little bit better if somebody's young with IUL, right? Because you can do it side by side. And I know already what it's going to look like. So no one can give me the glitz and glamour of IUL because I know how it's built, because I know it goes by their age on how well it performs. But I know later it's no comparison. It's like a renter versus a owner of a house, right? Eventually, over the years, you're going to have a lot of equity in a house, right? And after a lot of years, you're going to look at it as a renter, like, where did all my money go? What did I do? And so that's how you're going to look at it when you are looking at death benefit and the cost of it. Here's another thing about the death benefit when it comes to IUL. It's unknown. It's unknown that you're going to have a death benefit when it's time for it to be there for you at life expectancy later in life. It's an unknown. Too many unknowns there for it to be what we call set up for IBC structure.
Wow. I mean, ooh, this is good. Again, you are tuned in to Women Emerge with Melissa Lambert, and it's always an honor to have our special guest, Tony Chamblee, with us, the CEO and president of Core Financial Partners. We're talking about a topic that, the truth about money. We're always going to bring education when it comes to the infinite banking concept. And one of the questions that one of my clients had asked is, what was the difference between the IUL, utilizing the IUL versus the whole life with infinite banking? So I said to Tony, let's do a show so we can kind of talk about, is IUL the right product for the infinite banking concept? And I'm glad that you even mentioned age. And I'm looking at even one of my clients, and I'm looking at his IUL policy versus his whole life policy. And you are so right. As you age, the IUL aspect of things, it affects that. It goes. It's like their money is decreasing rather than increasing. And even with the death benefit, I realized something also, that it stayed the same when it was with the IUL compared to when we gave him the whole life policy, functioning as an infinite banking concept. And I want to really kind of dig deeper a little bit more, because I believe that we all need to know what's the growth potential. Because we hear IUL, we hear whole life, but what is the growth potential in an IUL versus a whole life policy set up as an infinite banking concept, right?
Sure. Let me go over the three types of IULs, or three types of way money can grow in any type of vehicle. It either can grow by being fixed, and fixed means it's going to be one rate and it's going to stay that rate through the whole duration, or it can be variable. Right, a variable means it can go up or down depending on where the market takes it. Right, it has an unlimited way of going down, and it has an unlimited possibility of going up. That's what variable means whenever you hear variable. And then you have index. Index does this, and which separates itself in the industry, and why a lot of people get excited about it. It has a floor to it where you cannot go below, let's say 2%. It could be 0, 1, or 2. Most of them are 2%. And it has a ceiling, though, right, that it only can go as high as 13 or 14%. So if I have an index, it can be an index annuity, index, which is an IUL, whatever it might be. So whenever you hear index, there's a floor to it and there's a ceiling to it. And people like that, because if you're a person that experience losses on the market, you're going to flock to something like this. You're going to believe this makes a lot of sense, that I can experience gains and not experiences ever getting my principal being touched. And then it does make sense. From a layman standpoint, it makes sense. So the biggest difference with the index from a variable, remember, variable means it can go below your principal. It can go negative 20. You've lost 20% of your money. However, though, a variable also can go above the 13-14%, which is the ceiling for IUL or index, right? It can go to 25%. You gain and participate in all of that growth. Index doesn't allow you to do that. So hopefully everybody got that down, what an index is. Now, in saying that, there's a cost behind all that. Fees, service charges, administration, and insurance charges. I can go on and on. This is where behind the door and the real close look at how it really works, those fees, those administrative costs, those insurance charges and things of that nature, it comes out on an annual basis. So if you're at 2% floor, let's say you experienced 2 or 3% low growth that year, Melissa, those fees, those charges, et cetera, it can take someone's policy growth under the 2%. It can hit a negative 2%, I've seen happen, based off of those charges and fees and things of that nature. So the layman does not know this. Matter of fact, most people, professionals in the industry don't know that. And they definitely not going to go over it with their client. So when I studied this, I was like, wow. So it's another reason why we don't use it for IBC. And the reason being why I say that is because IBC is all guarantees. We do not allow our clients to experience anything lower than the floor of 3. 3 is the floor. It only can go up. It cannot go below 3. And fees, administrative fees, and all that other stuff does not happen with a whole life, special dividend paying, mutual insurance company policy like what we use. And here, that really made a difference in my evaluation and the way we wanted to go about doing IBC the proper way through a whole life policy, is that these things are real when it comes to these IULs. Now, once again, the plus to this, though, you have a floor and you have a ceiling, and you're better probably off if you're not a risk taker than you, because a variable policy, Melissa, can go negative 20, 30. The most I've seen when it comes to negative going into their principal, it's about 2 to 5%. That's the most I've seen, right? And they definitely not going to hit this or go over. You cannot go over the ceiling, right? The ceiling could be at 13, 14. But let's say it does hit 13 or 14, right? And these fees and these costs and all that, and these charges hit that year, it's going to probably go from 13, 14 to 9 or 10, based off of that being added in the equation as well. So knowing this, you have to know this to know that IBC doesn't work that way. IBC, you can almost dictate what your future is going to look like and dictate what your money is going to grow to as well, because we don't have variables and when it comes to a properly structured whole life policy. So hopefully that's helpful.
Very helpful. Very, very helpful. And I want to one of the things that I realized, and I want to make sure we kind of cover this and throw this in there somehow. One of the biggest things that I realized, the difference between when I look at the illustrations for an IUL and an illustration for what we do through the infinite banking concept, utilizing the whole life policy, is what we call FPUR, the flexible paid up rider. I'm not sure if you can I'm just throwing that in there because I want to kind of show people that, that's why we can have this major growth, because the way we set our policy up to actually work it through as a bank. Can you just elaborate just a little bit on flexible paid up rider while we're utilizing this to help us grow our bank through infinite banking concept, utilizing the whole life policy way?
Sure. The flexible paid up rider or paid up additions, in most companies that's what it's called. What I love about that portion of the structure is that it allows your policy growth potential to grow much better than the average policy, whether it's a traditional whole life, because it's a difference between a traditional whole life and an IBC structural whole life. It's a big difference. So here's what that FPUA or FPUR does. What it does, it allows you to grow your savings in the cash value. It allows you to also put more into it that allows you to get more gains from dividends. And we'll talk about dividends in a second. And here's the powerful part of it. It grows your death benefit for every dollar you're committing and you're contributing towards that FPUR or paid up addition. It's growing all three. It's growing your cash value, it's growing your dividends, and it's growing your death benefit. So, Melissa, someone can start. Let's say someone starts with $500,000 of death benefit, $500,000. Mm-hmm. If they're doing this and they're saving inside of this policy over and above the cost of the death benefit, what's going to happen is that $500,000 is going to creep up and grow every year. I would say it would probably be over $600,000 by year 10, $700,000 by year 20, and so forth and so on. It grows every single year. And here's a big myth right here. I'm glad we're on this subject. But Lisa, most people are being told when it comes to IUL versus whole life, they're being told, can you walk away with a whole life policy, right? Can you walk away with when the person that's insured passes away, they transition, will they give you the cash value that's been built up in there and the death benefit? And the answer is no. And here's why. So when Dave Ramsey, if anybody ever say anything about this, this is why. I want to make sure we're all educated on this. When it comes to the paid up additions is just buying more policies within the policy. So if you started off at $500,000, that's what's considered the face amount. Whenever you hear face amount or see face amount, that's the original amount of death benefit. It never can go below that, right? But the paid up additions is constantly, if somebody's pouring money into this policy, they constantly are building up their death benefit as well. So that's why I say in the 10th year, it would be $600,000. If it grew by $100,000 from year 1 to year 10, it would be $600,000. Well, remember, you might have saved in there about $40,000 or $50,000, $60,000 in those 10 years in your cash value. But Lisa, the question is, if you have a chance for your beneficiaries to walk away with the face amount, which is $500,000, and let's say that the cash value is $60,000, right? I'm being generous here. Would you want your family to walk away with the $500 death benefit plus the the $60,000 cash value savings and have $560,000, or the way whole life IBC structure is, they have the $500,000 face amount, and all the paid up additions grew the death benefit by $100,000. The $600,000 is now in the policy death benefit. Would you want your family to walk away, or at passing, when you pass, do you want them to have the $600,000 or the $500 plus the $60, which is $560,000? Which way would you want to go with it?
$600,000. Come on, all day, every day.
It's
absolutely.
It's a no-brainer. But the people that are talking about how this really is are not telling the truth. And I believe some of them are good people. They just not been taught it. They don't understand that yet. They don't understand paid up additions. You should think more death benefit than you think just cash value. If you think more death benefit that then can be cashed out at the same time, now that makes sense to you, because that's really built from the cash value. So you are walking away with the cash value, but more than the cash value, because every dollar in the cash value buys more death benefit than the dollar for dollar that's in the cash value. So when I understood this, I was like, are you kidding me? See, one thing that we was blessed, LaToya and I, when we first started this industry, we were actually marketing IUL, right? And we were told, you want to learn more about whole life. Read about it, do your own due diligence. He did not want to debate us or go over side by side in comparison. He wanted us to read about it and do our own study. And what we discovered blew us away. And so understand, whenever you hear Dave Ramsey or any other professional out there tell you that, hey, but what about if you die or that person died? Why don't they give you the cash value in the death benefit? They don't understand paid up additions yet. They don't understand it yet. So I just want to go over that part. So the FPUR is the part of the structure that makes all this go. Without paid up additions, this would not be the same. So when I say that, let's go over this. If somebody have a traditional whole life policy, they don't understand paid up additions yet. So most people, even my mom and a lot of people I know in my family before we learned this about 10 years ago, have a whole life policy, right? My mom had a multitude of them. The thing about it, though, all her policies had cash value in it, because I remember her saying she borrowed money from it and things of that nature, or her policy was paid up. She didn't have to pay anymore because the cash value built up enough to pay for itself. And I understand that now. I didn't understand it then. However, though, it was structured to the point that her death benefit was not growing every year. It was the same. It was level the whole time. Do you know that's over 90% of the policies that's out there with whole life? Because if you're not taught on how to use them to the most efficient way, and that's why we're graduates of the Nelson Nash Institution, we probably know, and I'm not saying this to be bragging, right? I'm here to know that this is real, true information and education that we're transferring over to as many people that want to hear it. That we know these policies better than most people work at these home office of these insurance companies. That's how well schooled and educated Mr. Nelson Nash was on it. And so they prepared us to be able to read these. And you can't even pass the test if you don't know how to read it in a multitude of different ways and structure them 20 different ways for 20 different people. So one thing about that, we'll never have a policy, unless it's asked for it to be this way, that won't grow every year along with cash being put inside of the policy. And so that's a part of why it grows the way it does, and that's why it does some incredible growth happens with it because of it. It's a big difference maker when it comes to how the infinite banking policies are structured.
Wow, and it is. And one of the things that I can say is I'm glad that it's structured this way, because why would I want to wait till I die to use this money? One of the things that I love about the IBC way, what we do, how we structure it, is we show you how to use it as a bank. As you say, you dump in to the policy, you're putting away money that you can actually have access to, up to 90% of it. So even though you have this policy with your death insurance built in, you can use it for life now while you're living and still grow your death benefit in the process. And that's the great thing that I love about utilizing the whole life policy through the concept of infinite banking in itself. So another question is I want to ask of you. I know that we're running really out of time, but I really want to ask this question. What's the protection like when it comes to the economy downturn, when it comes to utilizing IUL versus whole life policy?
Sure. When it comes to protection, of course, the IUL has a protection built in, but I just went over that the floor is really not the floor. It can touch your principal. And also it has a chance to have a lot of volatility to it between those windows of 2 to 13 or 14%, based off of what happens on the market as well. And to me, I don't like the unknown. I'm not a person that, Melissa, that here it is now, I'm going into financial independence. Some people call it retirement. And I was told that I was going to have $200,000 to be able to live off of a year, or $100,000 a year based off the performance of my policy, just to come find out I got $30,000 to $40,000 in there per year that I can use. And the reason being, they project most of these illustrations that you're getting 8%, but what if I end up with 3% growth on the average over the years? And that's what most people end up falling into. They end up, Melissa, with less than what was projected, right? And that's why if you're under the sound of my voice today, go and get an in-force illustration from your policy if you have one, and get with someone that knows how to look at them and go over it with you, because we can, if it's been in place for a few years, the in-force illustration is going to tell you everything you need to know. Forget what they told you. Forget what they showed you when you first started. Let's see what's really happening and what's projected to happen from this day forward. And it normally tells us the entire story. It tells us the entire story. And so in saying that, now you have a choice. If I knew and understood it, and I understand this, whole life is as close as you're gonna ever get to the number that's on those papers. That's what's going to happen. You're going to get very close. And matter of fact, Melissa, everything that we show in our illustrations are being conservative. It normally performs better than what you see. The reason being, everything is guaranteed, right? We know we're going to get 3% or more on the growth of the rate of return. However, though, the variable would be the dividends. We didn't talk about dividends yet, right? When it comes to whole life, dividends is the only thing that's not guaranteed in a whole life structure policy for IBC. That's the only thing not guaranteed. Here's the good news, though. These mutual insurance companies that we partner with have not missed a dividend payment in over 100 years. Wow. So the projection that we do put on the illustration, or the company and the rate makers and the actuaries put on these illustrations, are conservative. They're probably going to save and only show it 10 to 15% less than what it normally performs. So what we show you, as good as they look already, it's really going to perform even better, projected based off of what has happened over the last 100 years. Everything about life insurance, you're going to get as close as numbers as any other entity or industry out there, because they do history, they do analytics for over 100 years for over 1 million people. So it's like they're going to hit it almost. They almost can tell when you and I are going to die. That's how well analytic they're doing their numbers, right? And so when you look at when we show people their illustrations, as long as they do their part and pay the premiums the way it's structured to pay it, and oh my gosh, if you overfund it, because we give it a way that you can double fund your paid up additions, which is your cash value, if you like. If you do that, it's going to explode, right? Even just by the schedule amount, not doubling it, you still can see how your finances are going to look for this just subsidizing your financial independence or your retirement in the future, right? I'm not saying that this can take care of somebody's entire retirement. It could. It depends on who you are. However, though, it definitely could, be one of the factors in you using this money later, because it's meant to use this money, and then by the time you're about to retire or walk away from your career, have all those loans paid back. You have all those loans paid back. Now you can look at this growth and this utilization happen for you and your family for the rest of the days that you're here with us, right? So it can be predicted. That's my point. It can be predicted. And you definitely can predict the legacy you're going to leave, right? Here's the problem, another issue that I have with someone that when you look at an IUL, the death benefit is unknown, right? The death benefit is unknown. Most people don't have that policy by the time when they transition. They don't have it. And the reason being, they can't afford it. I didn't talk about this a lot, but let's go over this real quick, Melissa. When somebody has an IUL, the older they get, I went over a little bit, the older they get, the more it costs for their death benefit. So when they get on the other side at 70, it goes from hundreds of dollars a month to thousands of dollars a month. And to the point, if they can afford that, God bless them. Most people can't. Most people can't. And now they have to make a decision to surrender that policy or let it lapse. And that's what happens to most people. So that's why it's important to get an in-force illustration done and look at what it looks like when you turn 70 and above, and you can almost measure what's happening at that point. And you have to ask yourself, can you afford to keep that policy? If not, you have to make moves with it as soon as possible.
And even us right now, thinking about what we have to do with one of our clients to be able to, show that it's time to make moves, and you have to be okay to realize what you're dumping down the drain is, you got to learn how to say, let go, so you can see the greater growth on your money. So I'm so thankful that we can really exist where we exist to be able to bring information to our clients and to our prospective clients to understand more about what they have, what they've been told, and be able to allow them, let the truth be told of what really whole life policy, utilizing the infinite banking concept, how it can truly become legacy for you and your family. So as we sum up now this entire conversation, again, you are tuned into Women Emerge with Melissa Lambert. We have the honor to have Tony Chamblee. He is the CEO and the president of Core Financial Partners. And we're talking about, is IUL the right product for the infinite banking concept? So, Tony, how would you sum up that IUL are not structured for the infinite banking concept?
Absolutely. I'm going to give 3 factors that popped in as you asked the question in my head. The first factor is that IUL is for accumulation, right? IUL is for accumulation. IBC is for utilization, right? Accumulation means I'm going to put my money somewhere and let it swell, let it grow. I'm not looking to touch it for the next decade or 2 decades or longer. That's accumulation, right? When it comes to IBC, that ain't happening. You should not be sitting on your money. You should be growing your money, let it swell to a certain degree, and you now want to use it for your lifestyle. You should not be going to a bank to finance a car when you've had enough money in your IBC policy. You should not be going on vacation using a credit card unless you're using it for the points and you pay it by getting yourself a loan when you get back home from your vacation and pay that within 30 days so you won't incur the interest, right? So once again, any education, you should be able to fund your own kids' education, or at least, support what they're trying to do for college if you're doing this right. Because remember, and this is in both policies, the government can't see that money. And that's with the IUL. I do want to say that. It's with the IUL as well. However, though, remember, you're using this as you get it. Some people are using it immediately, Melissa, because they have money to move over and transition in lump sums amount. So now, like we have somebody right now that's about to buy a truck for his trucking business, and we're trying to get him approved and get that money in there for him to be able to use 90% of it and take it out to buy a truck, right? So that's utilization versus – you can't do that with an IUL. With most IULs, the way they're structured, with over 90% of the agents out here, they can't touch that money to 10 to 15 years in. Can you imagine seeing your money grow but you can't touch it? This is just as bad as a qualified plan, like a 401k or 403b or whatever it might be, right? So that's one. Here's the second factor. Let me go through this quickly. It's control. You control everything about your IBC policy. With IUL, the control is in the insurance company's hand, not yours, right? They control it. They can make it go up or down according to what happens on the market. They can say the premiums are going to be higher because the performance is low, right? They can determine because you're late, even if it's their fault. I've seen a client or several clients, at least one client, it wasn't even his fault, Melissa, and they still took off the guarantees and he couldn't get it back on, right? So control. Here's the other thing. The risk is on you, not the company. The risk is on you. You don't have control, and as having an IUL policy and you being an owner, the risk is on you, not the company. With IBC, it's 100% on the company. All the risk is being had or taken is on them. Last factor is that you are in a position now to grow your policy the way you want to, based off of how you pay it back. And we did a whole podcast on that. If you didn't hear that yet, on how to repay your policy, that's where the rubber hits the road. True IBC is how you pay it back. See, the insurance company, Melissa, the insurance company is just a hired help. They just a hired help. It is not the make or break. The make or break is how you use it. It's just like if somebody had, me and you have the same vehicle, we bought it the same year, the same exact vehicle performance comes from it, but how do we use it 10 years from now or 5 years from now? It's how I take care of it, how you take care of it. You can see two people get the same vehicle over the same years. One is broke down, barely working. The other one is driving to be in a classic, right? Riding smoothly, engine nice and quiet. It's all about how did one use it versus the other. That's exactly in this type of structure. IBC is not about the insurance company, what they're going to do. It's about what we're going to do. I wanted to get that across. Hopefully that makes sense. Just know that there's layers to this, and we just want to make sure everybody gets the fundamentals and grow with it. And that's why we offer all kinds of resources on how this could be for you and your family.
Wonderful, wonderful. Oh, my goodness. We are running out of time, y'all. We only have 30 seconds left, so I'm going to literally give you all of Tony's information in the description. Thank you so much, Tony, for always being here. We're going to do this again and again and again. You have been tuned into Women Emerge with Melissa Lambert. We had the honor to have Tony Chamblee, who is the CEO and visionary of Core Financial Partners. We talked about, is IUL the right product for the infinite banking concept? The answer is no, it's not. So please listen in and tune into all our podcasts. You hear what IBC is and how you can be really, truly empowered by what we do. You can also visit all our information. Go to learnmorewithcore.com, learnmorewithcore.com. If you want to utilize the IBC to get out of debt, coredebtstrategy.com, coredebtstrategy.com. Then you go to corereads.com, read about it, know about it, do something about it. And also, if you want to be able to reach a corepreneur, go to corefinancialpartners.com. Just let us know who's that core partner that sends you, or just reach directly out to that corepreneur. If you don't have anyone that's a corepreneur and you want to find out how you can reach myself or Mr. Chamblee, I can be reached at LambertLegacyFinancial.com, LambertLegacyFinancial.com. You can follow me on Facebook at Melissa, Mellisas Lambert. And I'm just so excited. All of Mr. Chamblee information will be in this description. Thank you again for tuning in to Women Emerge with Melissa Lambert. If you found this helpful, and I hope you did, please, please, please share this with someone you like, love, and trust. We truly appreciate you. Mr. Chamblee, thanks again for all that you do. Until next time, y'all, take care, take charge, and continue to be great. Bye.
Thank you for listening to Women Emerge with Melissa Lambert, where Melissa speaks with leaders, experts, and motivators who share their journeys and their stories through personal and professional growth, knowledgeable tips, and lessons learned that will empower you to grow. Follow Melissa and Women Emerge Network on Facebook, Instagram, and TikTok at MELLISASLAMBERT and at Women Emerge Network. And visit www.womenemergenetwork.com. Remember, when you know better, you can do better, especially when God is for you.